Hey everyone, this is Chart Sniper with a weekend market review, and I have been waiting for futures to be up and to make this video. So that's why the delay. So let's see how the market did last week. We saw a very tremendous bounce, and let's try to find out and see if that was a real bounce. Does it have more strength to go, or what might be in line for this week? So with that, let's get started with a deep dive into some of the major indices and respective features. Okay, so with let's start with ES, which is a SPY features, and what happened last week, last 4 days especially, was an intense bounce right into the 200 days average. The red line that you see here is the 200 days average, and we directly bounced from that. The first after I think after Monday, Tuesday we gained 5.8, and Wednesday we gained 20. We stayed above it, and Friday we moved above 50 directly into the 200 days average. So especially when we last time we were not able to hit the 200 days average, now we are hitting it. Okay, 50 period average is still pointing downward. There is some catch up to do with 5 and 8, so there is some gap. So while as impressive as that bounce was last week, it could be probably because last week was a monthly expiration for options for March month. It's also the first quarter expiration. So we have to really see that in the perspective. So when we go and look at some of these things, so this is a January expiration, okay? And when we look at it, the January expiration, we had let me get to the green. Okay. So this is the January expiration it was, and this is where it closed February expiration, right? And then this is where we are now. We closed the March expiration. So we're just back to the same level as we were at the end of the January expiration. So because this is a new year, a lot of option positions might have been in place by the big players, and probably by getting it back quickly to that level, they are they are making sure the puts and calls that were bought either here or puts here, right? Everything is expiring worthless. Okay, so that could be one of the major motives on why we saw such an aggressive bounce. It's just the quarter end and quarter end quad witching expiration, and big players are trying to get the market to a place where they don't need to pay much for these option buyers. Okay, so that could be one of the reasons, or the actual reason could be, market, whatever price action that you see takes into consideration a lot of news that has not been out yet. Okay. So it could be that, there might be some internal news on the weakness of Russia with respect to this war. There might be some news that, Russia probably might not be able to continue with this war. So there might be so many things that has not come out yet publicly, and those big players who have access to that kind of information are positioning themselves for a bullish direction by buying so aggressively. Okay, so that's a good thing about that's a positive perspective of this bounce, and the negative perspective was, or neutral perspective is, hey, they just brought it back to same levels as January. Okay, so that's a neutral perspective, and bearish perspective is like, from oversold conditions it started bouncing, and now we are at a very critical resistance. Why do I say that we are at a critical resistance? For the first time, we are retesting the 200 days average. Okay, and if you see this cloud, we almost are very close to the cloud bearish cloud, and we are reaching that level. There might be some upside move, but we are reaching that level. Okay, so here is the scenario where it tried to kind of cross the 200 days, and one day it stayed above and the next day it puked, right? So that is still possible. Tomorrow morning there can be a bullish move all the way here, and then it can lose back and give up and come back all way down also if the war intensifies. So no one knows really what the market is going to do because there are so many factors. The Fed interest rate hikes um, could, I mean, the market might be adjusting to the fact that Russian war is over, but then the truth comes in that the Fed is more aggressive in terms of raising the interest rate. This pullback that you saw in January was related to the Fed interest rate hikes adjustment, right? If this was enough, if this was pricing in whatever the number of interest rates that Fed was supposed to raise, then we might be okay. Okay. This was a down move because of that global war pressures and stuff. But yeah, so now we are back at your level where if all the negative news about Fed interest rate hikes is only this, then we are okay to kind of stay around here, afloat here, and move along. But if this price did not include those many hikes, then there might be some pullback. Okay. So with that, let's do a quick look at weekly how it is doing. So weekly, we have bounced overall. If you look at it, we out of this entire down move that happened in the last 2 months, we bounced back to 50 percentage. Okay, so that's not extremely bullish, but I would say it's better than staying below 38.2 percentage, right? So we bounced back half of it. What does it mean? We are at half of this level. Price can go higher or it can go lower. No one knows about it, right? If it goes lower, we see that there is some support of the cloud. It might go and visit these levels and then probably stay here for some time and start bouncing higher. That is a possibility, right? Um, So with that being said, not yet that constructive. This was such a huge candle. It might take some digestion, or it could continue like that if Russian war is going to end and Fed interest rate hikes news was already baked in. It might continue higher. So if you see here the kind of bounce that you see every week, it started making higher lows and higher highs and 1, 2, 3, 4, 5 weeks, right? So there, this was in October, correct? So those kind of performance like 1, 2, 3, 4 weeks, right? So this is a big week here in February of 2021, and then we saw one follow-up week and then a little bit pullback, right? So there can be many scenarios possible here, but the fact that on a daily we are at a 200 days average resistance, we have to be careful in playing aggressively to the upside or aggressively to the downside because no one knows what the market is going to do, surprisingly, right? So when we look at monthly, I would like to look at the long-term perspective also. It pulled back to 20 months average and then it trying to gain that 5 months average. It has not yet gained completely. So this week is going to be very, very critical for the bulls to move it back above that 5 months average, okay? Or in terms of daily to regain the 200 days average and probably move above the cloud and stay above the cloud for the entire week. Okay, so that sets that whatever strength that we saw last week has some legs and it's actually a trend reversal. And then we'll see the news following through that the war probably is kind of fading away, those kind of news, right? But yeah, so as of now it's below 5 months average, so we cannot consider this as market out of the woods yet. Okay, and we are still below like this entire March move is still within that body of that February move. Okay, so yeah, nothing constructive happened with respect to the last month, but that bounce is really very nice bounce, and we have to see how far it could continue higher. Okay. So with all that being said, it's very simple. Whenever it hits these resistances, try to wait out and see what exactly it will do. It can easily come back to that 50 days and bounce back and sandwich between those two, oscillate there. As long as that is happening, that is a healthy consolidation that is happening. While it is letting all these averages to slowly come up and form a support there. Okay, so that's what's happening. As long as it goes sideways between 250, or maybe it can come back all the way and find 20 days average as support and oscillate between these three, as long as it is doing that, it's fine. But if it fails here, we might see, probably from March all the way to March 28th, which is kind of probably the next week, right? If it fails to cross this cloud, then we might see this big down move that could happen. Okay. Yeah, but the cloud is very thick. That's why it's a very strong resistance in ES, and the volume of the bounce kind of faded away towards the end of the week. So we really have to see if it was expiration driven or it has really some strength. Okay, let's go to Nasdaq and see how it did. So while S&P ES bounced back all the way to 200 days average, Nasdaq bounced only to 50 days average, and it is finding it at the resistance, and the cloud is still very thick here even for it to cross. This is on daily, not above volume. There on a weekly basis, it is in the cloud. As long as it is in the cloud, it's just a noise, and it has to move above the cloud or below the cloud to have a direction, but it's in the cloud, it's just a noise. Okay, and then when we go and look at monthly, we are very, very below the 5 months or 8 months average. There is a lot of catch up to do. If market and whatever news that was based on the entire rally, if it is true, we don't know it yet. If there is any positive news coming on, then it can easily play this catch up from here to there, from 38.2 to 50%, and still be, not bullish, because it's still below that 5 days average, 5 months average. Okay, so there is some catch up in Nasdaq to do, but overall, the first thing is it has to regain that 50 days average. Then it might bounce to that 200 days average and kind of oscillate there for some time, sideways action. Okay, so that is constructive. But if it starts moving down right from here, that's not all constructive. This was just a bounce in oversold condition, like the bounce that it happened here, and it might, yeah, it is still kind of a lower high with respect to this one, right? So we have to really see how it might be just, too much move to handle. Either digestion needs to happen or it reverses completely, so no one knows. Just be cautious about this week, because this week is going to be very critical both for the bulls and bears. For bears especially, this kind of very quick rally in 4 days is a very good sell the rip opportunity. Okay, no one will miss a chance to kind of come out of their positions that they had in January, or book profits from here and let it go down again. Okay, so let's quickly look at how Russell is doing. So Nasdaq only bounced only 38.2%. Okay, it did not even hit that 50%. While Russell, let's go and see. It is in the cloud. It actually is probably, it did not go down as much as SPY or ES here in the beginning of in the last couple of weeks, and it is at the cloud resistance. We have to really see whether it will break out or not. If it breaks out and stays about it for a couple of days, then but that might, because a lot of risk. This is a Russell is a risk, is a stock that shows the risk taking the ability to take risk, right? So people are ready to take risk by, if it moves above the cloud, then that shows the strength also, and it might mean that other indices are following too. But in the long picture, it's still below the 38.2 retracement. Okay, volume also, like, there were the initial 2 days probably need to neutralize this sell-off, but it's not that encouraging. I would like to see, this above 50 is okay, but above 60 is really where um, it gets the RSI levels above 60. That's what I'll be looking at to see the bullishness continuation, right? The next one is Dow Jones Industrial Average. So this looks very constructive. It is above 50 percentile already, and you see there is a very 200 days average. 200 days average is there. The cloud is very thin. If it really has to break out, this is an opportunity in this week for it to break out and stay above that. So this might also show, the direction for where the QQQ or SPY might follow. Okay. So not that constructive from volume perspective, and when we go and look at on a weekly basis, above the cloud but below 50 weeks average. So that is what we are looking at, still below a lot of critical averages, and monthly also. Let's see, it's below 5 months average still. Okay, so overall the dip back to 20 months average has been bought, but they're still keeping it below 5. So they might, if they have any doubt on what is happening, or probably more intensification of the war, all this kind of stuff, right? They're keeping it still below those levels so that they can adjust it accordingly based on the news that will be coming up. Okay, so very short-term opportunity to turn bullish, but the longer it waits here, the chance of it coming back to these levels along the cloud increases. But at least instead of pulling back completely very quickly, if it floats, that might show some strength also. So we have to really wait and see what exactly is going to happen. Let's quickly look at VIX. So from it was around 37 levels, and this was the uptrend that we charted and we discussed in previous sessions, that if any big flush happens in the market, it might hit those levels 43 or 44. But as of now, it's still above 20. Um, but it has gone up quite a bit on a daily basis. So we have to really wait and see what will happen next week. So if it stay come moves below 20, which is a 200 days average, and stays below that, that might show some. By the time the market probably would have crossed some critical levels and staying afloat. Okay. So as of now, a little bit elevated, but not that elevated. I think in line with what market did in the last 4 days, it pulled back significantly. So as of now, no concerns, but we have to wait and see. So with that being said, just to kind of summarize what we have quickly went through, SPY either to resistance and 200 days average, we really have to wait and see what exactly it does. So our QQQ and all these kind of major indices are at critical resistances. Okay, so stay light with this. I mean, if you bought something here, better to book some profits here. You want to sell everything, but book some profits here. If you were exposed at the end of the January, um, with a lot of exposure to bullishness, and then you felt that pain here and here, then this is also a good opportunity to reduce that burden on you by coming out here at some break even levels, right? Not break even, at lesser loss in case it pulls back significantly from here. So uh, exactly at resistance, while the overall global news landscape or Fed stance might not be that encouraging to support a bullish breakover. Uh, Nothing can prevent it if big people knows, some inside news about the war, right? So yeah, stay cautious at these levels. It can go in either direction. Um, we should not pick our direction here or at the resistance level, right? What we have to really focus on is playing from one level to the next level. It's like here from 20 days average to 50 days average, correct? And if it moves above 50 and stays about for a couple of days, then we can play from 50 to the cloud or 200 days average. That bounce range is what we can play than playing a bet that it will go higher at this resistance. That's not the bet that we would like to be in. We would like to play from hop from one average to the next, rather than betting that it will cross over that average. So stay cautious, and I'll be looking at this week very carefully. because that will set the tone for bullishness, or if this bottom was a real bottom. Okay, so with that in mind, I would like to conclude this quick recap and overview preview of what major indices. Okay, thank you very much for joining in. See you in the next one.